Actually, I have to grab a pen. Let's go to the main camera. Let's do this. How we doing, guys? How we doing? Awesome. I'm so pumped because I know last week when we started, we only had like 3 people in here. So that's like 10 more. So that's exciting. One thing that I have been struggling with the last couple of weeks is syncing up my audio and my voice. So that's another thing. If you guys could just let me know if it seems like I'm doing a little bit of the voice and the the microphone. If it looks funny, can you let me know? Usually people are just like, no, it looks good. Just let me know everything's going good, because the voicemails are so good tonight that there's going to be a lot of clips on the main channel. And also, I've been a little bit of a deadbeat on the main channel, so I definitely want to get some content out to you guys. Awesome. So I'm glad everything looks good. A little low, but I can hear. Okay. Awesome. Thank you guys so much. So, as I was mentioning in the chat, 2 shakes of a lamb's tail ago, I had myself a nice little afternoon on the beach. I got back in from Austin, Texas, spent some time there. This past week, got to meet up with all my nerdy money nerd friends. You guys know who my people are, but got to spend some awesome time with them this week. Learned a lot. If there's one thing, there's a couple huge takeaways, and I was thinking about almost doing like a video follow-up almost with how FinCon really affects big, small channels. But I know not a ton of people are like into FinCon or those festivals and stuff, but I learned a lot. I learned there's a ton of money in the space. I learned there's a ton of people making money. I learned there's a ton of people that have no idea who I am, and likewise. I figured if I ever walked around like a personal finance conference with JJ Buckner, like the water would spread, the light, like people walked up to JJ Buckner and had no idea who he was. So that was kind of humbling and awesome, but there's also a ton of people that are just working their ever-living butts off, almost like harder than I want to work. So that was kind of inspiring to see, the hustle and the grind, because that's something that's missing a little bit on my end, that hustle and that grind to get a video out every day. So there's like a little bit of rejuvenation over there in Austin, Texas. So we were able to do that. But so many like internet friends, I've had internet friends for years, and it was so nice to finally meet some people in person. Literally I've had 4-year relationships with people like Jared Moreau that I finally got to meet. And, Kellyanne Smith, Freedom in a Budget, finally got to meet her. Dennis Truffin, True Financial. So many people that I've literally been texting back and forth with for 4 years, and I finally got to meet them. I was supposed to go last year, but COVID, and then the year before that, my son was born. So I want to kind of, unless there's I haven't seen any questions in the chat. So guys, coming through clutch. I was at the beach, and I get notifications every single time. I get a voicemail, and yeah, I got a bunch. So I'm really, really excited on that front. I don't think I'll be able to, hold on. I don't think I'll be able to get to them all tonight. That's how many we got. So thank you so much. So in the last 24 hours, I've gotten 1, 2, 3, 4, 5, 6. So that's more than I've done so far on the show. And then I didn't get to Kyle's last week. Most of them, guys, and this is a huge question I got at FinCon, if it's been bothering me that a lot of my content is based around options when they know that I'm primarily an index fund investor. Like people that never met me, they're like, what's your channel on? I'm like, personal finance. And they go on and it looks like you're an options trader, dude. Like you're on personal finance. And I said, at first and foremost, I'm an educator. I like to teach. I like to show people ways to make money. And I was a guy that hated on options for so long, ignorantly. And then when I finally found out about it, I was like, oh my God, I got to tell some more people about this. So I'm like, I have 400 videos, and the last 20, 30 of them, yeah, probably been options based. But those are the questions I'm getting in voicemails mostly. And I'll get some hate, but it's one of those things where if those are the questions that are coming in, those are the questions I'm going to answer. So if you're hating on the options, then ask me a question about getting out of debt. Ask me a question about VTSAX. Ask me a question. Like, it's an open book. I'm not filtering out all of the fire questions and just doing options questions. I promise you that. As I'm answering these guys, and I'm pretty much going to play them out, I want to let you know that I plan on clipping them. So if some of them seem like a little video-esque, that's okay. Maybe even an outro. I'll throw one of those in maybe. But if you have any questions that you want me to answer, I'm not going to go one and two another voicemail and just do one and then another and then another. If you have follow-ups about that voicemail, if you want to fact check me, you think I'm wrong, that's been adding a lot of great value. If you've seen the clips on the main channel, you know that I've been editing them down and, making sure that everything's good. So help me out a little bit, help me out. So the first one came from Kyle, and it came in last week before I went to FinCon. He actually made the voicemail while I was live last week, and he's like, I tried to sneak that in. So we're going to listen to that. I'm pretty sure I have all the right inputs and stuff last week. I'm playing it. So if it goes a couple seconds and you haven't heard them, I know if it goes a couple seconds and you don't see it or don't hear it, just let me know in the chat. Just let me know, and then I'll be able to just put this in. But this first question, it's going to come in from Kyle. And you guys do know as well, if you've been watching for a couple weeks now, you know that they all definitely are going to come in at different volumes. Some people just speak louder into the phone. So if there's anything that I need to reiterate, I will. And we'll go from there. And then in post-production, I can always raise their volume so that when it does go live, we'll see. But I have a feeling, especially if you're in my Discord, you're going to like this question from Kyle.
Hey, Brad. Love the show. Quick question regarding the poor man's covered call. Just curious what happens if I get assigned on the short end of the call and I don't have the funds in my account to cover it. Does it resolve automatically and they just take my leap option? Or what exactly happens in this instant? Am I going to have to eventually deposit the funds in my account to resolve the debit? Or what exactly happens? Thanks.
So a question I get very, very often. The potential outcomes of the leaps option and the poor man's covered call. We know we're going to have two options here. And at the link of this, if this is making it to the live channel and this is going to be a clip, I will link some videos at the end that you can dive right into the poor man's covered call if you have no idea what I'm talking about. But what are the potential outcomes? What are things that can happen? We know as the buyer of the leaps, right? We have the right, not the obligation, to exercise an in-the-money option that has intrinsic value. So we kind of have the control. We don't have to worry about people exercising on us. We don't need to worry about being assigned. The only thing we need to worry about when we buy an option is where the hell is the share price, right? Are we in the money, out of the money, and how does everything look? It's that short call that we're using. So those that are unfamiliar to the poor man's covered call, you first buy an option, and it's frankly just a debit spread. You're going to buy an option, pay some premium, and hope the share price goes to the moon, goes to infinity. When we write calls in the wheel strategy, we need 100 shares of that particular stock to write the call. We need collateral. That collateral is 100 shares. Well, when we do this leaps option, we can use the options contract, not 100 shares, as the collateral to make this trade. So what the heck happens as the writer of the option, the seller, we can be exercised in the money. Now, first and foremost, there's a very super low chance, especially if you're not using a dividend stock, that you are going to be assigned early. Unless something crazy happens, you are not. Because we know as the buyer of an option, we never want to exercise early. And if you don't know why, I'll leave like a card. I don't know which side of me the card will be on, but I'll leave a video why you should never, ever exercise an option early. But what if it gets to expiration? Well, we're going to move past the fact that I'm almost never going to let my short call get to expiration. My job is to protect the leaps because that's where you want to make your money. Your goal long terms with this poor man's covered call is the leaps option. Your goal long term is to make sure that that leap option gains as much intrinsic value as possible, because as we approach expiration, extrinsic value, the other part of the value of the option, is going to go to zero. So we want to gain as much intrinsic value and then one day sell that option back to the market for a lot more value than what we purchased it for. That's like the goal. But let's say something crazy happened. It goes in the money. The buyer of that option is a Dumbo and they exercise on you early. What are the potential outcomes? Well, to be honest, it depends on your brokerage. I cannot speak for every brokerage, but I do know that every single brokerage has in their terms and conditions, and if you search on their website what will happen in this outcome, you're going to want to look at spreads, right? You might not be able to type into your brokerage what happens when my poor man's covered call gets assigned, right? Because that's a slang term. But if you're going to go to debit spreads, what happens when my short call gets assigned? Here's the things that I've experienced and heard, okay? If it is at expiration of the short call, meaning it was supposed to expire on Friday, it expired Friday, in the money, and now it's going to be automatically exercised by the broker. Please don't let that happen. When you get assigned on your short call, make sure it's like a fluke occurrence. Like you're like, damn it, why are they exercising on me early? Make sure that if it ever happens, that's the reason why, okay? Because you're going to want to roll sometimes at a loss, close that, move it out, protects your leaps option. When it happens on expiration day, from my experience, and this is with the basic brokerages, okay, the apps that we're using and we all love, and even some of the bigger ones, you are going to be assigned on that option. The brokerage, Robinhood, Webull, Vanguard, they are going to automatically exercise your leaps option, okay? Now, when we say exercise, we don't mean sell to close. So if the value of your option is soaring and you're up 3,000%, that's why this is a terrible thing for you, because you're going to lose that 3,000%, right? You are going to buy 100 shares at that strike price, but then you're never going to get to hold those 100 shares because they're going to go right to fulfilling the collateral of selling those 100 shares back from your short call, okay? That's all going to happen automatically, all right? And then your profit or your loss is going to be the difference in your strike prices times 100 minus the premium that you paid for the leaps plus any premium that you collected from the short call, which is why, just as a general rule of thumb, if you never want to, quote, lose on a poor man's covered call, make sure that your short call, the difference between your strikes of your short call and your long call, times 100 is greater than the premium that you paid for your leaps. So that's at expiration. Now, let's say it's this freak occurrence where it happens on a Wednesday. And you're like, damn it. From my experience with the brokerages that I've seen and heard from people, this personally has never happened to me. So this is all hearsay, okay? What's going to happen is one of really two things. Your brokerage is going to do the same thing that as if it was expiration. It's going to automatically exercise to get those 100 shares from the person that got that option that you sold to or bought it from. And then they're going to use that. And that's going to be the end of the day. Same profit outcome as if it's expiration. Another thing that happens, especially with the more reputable, older, bigger brokerages, is you will get a notification that you've been assigned on your short call. You have the option to buy 100 shares at that time to satisfy that, or they will give you maybe one day, maybe two, to sell to close and then buy 100 shares so you don't lose any profit or loss that you have. Or I guess option three, oh no, that's option one. They take that and automatically exercise that to assign over here. All right. So if you get to expiration, and this is pretty much the long and short of it, if your short call gets assigned, the brokerage is either going to automatically exercise your leaps option. You're going to lose any profit due to new intrinsic value, or they're going to tell you you can buy shares, 100 of them, to satisfy your short call that just got called away from you, or they'll give you a day or two to sell to close your leaps option to use that money to buy the 100 shares. I hope that helped, Kyle. If it did, this is going to go to a clip, so let me redo that. There you go. There's a little live scene. Kyle, I hope that answered your question. Guys, if you, like I said, you want to see a video about the poor man's covered call, I'll leave it right here. And that's it. All right, guys. So anybody in the chat that has a question about that, a follow-up, it's a question I just hear a lot, and I'm glad Kyle asked it. He actually DM'd that in a DM, and I asked him to leave the voicemail because I do get it. Limit order at the strike price, maybe. See, now I don't know what you mean. A limit order for which of the two contracts? I mean, I place limit orders on my short calls sometimes, but I mean, I'm trying to think of like, what are the reasons why we might want to hold this short call expiration? One, we don't know that we should close. Yikes. Two, it's been in the money and you're kind of screwed and you're kind of hoping the share price comes down so that you can buy to close at a cheaper price. Or you, like I said, I guess you were just being greedy and it got a sign. I don't know. Limit order at the strike price maybe to buy 100 shares. Yeah, but not every single brokerage is going to give you that option and protect your leaps. I know like Robinhood won't. Like if you get exercised early on Robinhood, it's going to automatically exercise your leaps. If you get a sign on your short call, Robinhood's going to exercise your leaps option, and that's going to be the end of the ball game. They're not going to give you the option. The bigger ones are probably going to give you that option if it's early. If it's at expiration, you're going to lose that leaps. Aaron had some value. In Schwab, they will actually sell your shares short, meaning to margin, and you will be able to decide whether or not to exercise your leaps or just buy the 100 shares at the market price. Yeah, so that's kind of like they pretty much cover the shares for you in margin, and they say, hey, you got a day or two to figure this margin thing out. Yeah, but you still get that initial credit. Oh, right on. So you will get the. All right, that's a good idea. So you do get that sell to close. Good to know. Answers. I'm going back up the chat a little bit. Vita with Vicky. How you doing, Vita with Vicky? How the hell you doing? Vicky, probably one of my first 50 subscribers. You're invested in HBQ. Have you made a video about why? Because I have mixed opinions about the company's future, but the numbers over the last 5 years are just delicious. When you say invested in HBQ, I own puts on them. Sold puts. I have written puts against HBQ, and I also have a leaps option on HBQ as well. I can bring up my, let me bring up my portfolio quick. I can show you HBQ. To be honest, I've been away for a couple days, so I don't even know how that HBQ is doing, frankly. Let me see this. Just bear with me one second while I bring up my other screen. I'll show you HBQ. I'll show you guys in a second. I'm just putting my passwords and all that fun stuff. So let's see how HBQ is doing. Let's shift over here. All right, guys. So this is the Robinhood portfolio currently. If you're on your phone and it's small, I do apologize. Right now, my leaps option are Waste Management, Tattoo Chef, Starbucks, HBQ, as we just noticed, and Vuzi. I have open cells with Waste Management, Tattoo Chef. I'm waiting for the others to go green so that I could write some calls against them. And I do have a $10 put on Vuzi, the current share price on Vuzi at $11.23. So we'll see how that one goes. As far as the HBQ call, that is currently naked, so I mean I don't have a short call against this yet. Expiration is 2023. I paid $7.10 for it. No, I paid $7.40 for it. It's currently $7.10, so I'm actually down on this position right now. But my adjusted position, because I have made 2 calls against it, not so bad. The break-even price is $29.40. So essentially, by buying this option, I believe that HBQ can be $29.40 without my adjusted basis of selling my calls by 1/20/2023. If we were just look at this share price, because right, this 22 is not the current share price. So with a break even of $29.40, the current share price is $27.78. So it's down about 11 cents. It does not move that much, okay? But if I'm looking at the last 5 years, like I said, it definitely had a little bit of a jump. But what I'm doing when I'm looking at this last 5 years, I'm kind of like looking at this Oh, you can't see because my picture's in the way. Get the hell out of the way, you jerk. Oh, not that one. Sorry, guys. My picture's in the way. Let's move me down here. That's better. So when I'm looking at the like trend over the last 5 years, I'm thinking this is the one that means a lot to me. And then if I were to continue this up, here's kind of where I get my, pretty good value. Now, I don't get my value for a company from a picture, but this is like a confirmation that I don't really care so much about all this madness in here because I think they're a steady grower. To be honest, I don't really necessarily think they're going to like shoot to the moon, but over the last year, they've had some steady growth. And with what's going on with computers and chips, even like they're all working together, right? When the chips are doing good, computers are doing good, cars are doing good, they're all intertwined. So I just figured to myself, I think it'll go up at least to $29. That's my main thing. This is kind of one of those conservative plays for me. It's more of like a value leaps. The premiums are decent, so that's kind of where I'm going with that, and that's why I particularly chose this actual option. So I hope that answers your question. I really think it's just I think it has the potential to go up at least to my break even. And when I'm selling leaps, like that's first and foremost, right? Can I get to my break even? And then I evaluate past that if I really need to. Zhao, what's up, Zhao? How you doing, buddy? Any reason you might hold until expiration is if your brokerage trading fees will heavily eat at your profit on the short call. Okay, that's another good reason. I mean, I will say this. If I am trading options with the brokerage where I think that's going to be a problem, I'm going to go to a different brokerage, which is why I trade on most of my options here. But I mean, what's the biggest fee that I think I would, even 65 cents is like a big one, but 65 cents for the whole trade? I don't know. Maybe I'm missing something there, but I just wouldn't trade necessarily with a particular company that's going to be just kicking me in the face with those fees. I mean, if it's going to heavily eat into my profits, if it's going to protect my leaps, I'm not really going to care about too much. Thank you so much for the question. Let's get to the next one. The next one's going to come in from Sean. To be honest, I don't know which ones these are. I knew Kyle's because it was from last week. I haven't heard Sean's yet, so hopefully he doesn't troll me. It's a little bit longer, so hopefully we can understand it. But let's take a listen to Sean. I might take some notes, and we'll see what Sean has to say.
Hey, Brad. Big time, long time. Just have a question regarding just selling options in general. I've been sitting down in every strategy, whether it's an iron con or a poor man's covered call, regular wheel stuff, whatever. And I've been doing some math, and basically what it comes down to is it seems that on the surface, selling weekly options in any strategy tends to be more profitable than selling monthlies or bi-weeklies or 2 monthlies out, whatever, or even leaps. Well, technically not leaps because it'd be out of the money, but just because, 4 weekly options, the premium adds up to more than 1 monthly option. So I'm just wondering, why wouldn't I do the weekly option versus selling 1 monthly option? Because I feel like there's a risk factor that I'm not seeing here or something that I'm missing, because there's no such thing as making extra money risk-free anywhere. So I'm hoping that you can shed some light on this and hopefully kind of help me see what I'm missing here.
I am so glad I got this question, and I'm so glad that Aaron Azevedo's here, because he is one of the 2 reasons that I'm going to give for this option, and among any people, but I've just heard Aaron say it before. First, Sean, you are missing something, okay? You are missing something, and people are getting in the chat. Yep, that's right. If you're watching, you kind of know the answer, because we have kind of talked about this a little bit, but you are missing something, and there's really going to be 2 reasons that I can think of why you might sell weeklies versus monthlies. And I'm going to start with this. From my experience selling calls and doing the wheel strategy over the last 3-4 years, seriously, I can say with pretty much 99% certainty, you will make more money selling weeklies than you will monthlies. You will, if you are going to do this, especially if you're buying to close at the right times and you're going to be rolling your options, selling weeklies, then, and I guess we're talking about like if you have the option, right? Like, because some stocks only trade monthlies, like Vuzi. Some trade weeklies. Most of them are going to trade weekly. So we're assuming that this is, you have the weekly option or just going out a month. That's what I'm assuming this question means. So yes, 100%. If from my experience, you are going to make more money selling weeklies. Weeklies are also awesome because you can kind of get it. There's not a lot of theta to mess with what you're doing. All right. Weeklies, in my opinion, are better. They are better if you are looking to make money. So now some of you might be scratching your head, Brad, why the hell, after saying that, would you, trade monthlies? And it's the same reason that I've mentioned, and Sam from My Financial Friend asked me when we were in Austin, Texas, Brad, if you made 100% return on your Robinhood portfolio selling options, why the hell don't you just put in $100,000 and live off of that? And my answer, and this is one of the reasons when weeklies come into play, is the time factor, right? How much time do you have? Guys, options are not necessarily set it and forget it. In very, very rare cases are they set and forget it. I mean, maybe with a leaps option, you have to set it and it's going to expire in 3 years. And you're like, okay, or 2 years. You're like, whatever. You could kind of set that and forget that. But when it's a weekly, just like there's not a lot of like theta that can screw you up, you can still get screwed up, right? So there's still some maintenance on your end when you open up an option. When you write a call, you need to manage that call. You need to see when should we buy to close. You need to see, like, am I going to get to expiration as signed? If I get assigned, am I going to wheel that? What am I going to do when I get assigned? Do I have to buy 100? There's a lot of outcomes, right? So by doing a weekly versus a monthly, you give yourself essentially 4 times the amount of work, 4 times the amount of maintenance, 4 times the amount of things that can go right or wrong. All right. Now, if you have that time, like this is an awesome hobby for you, and this is what you love to do, then sweet, dope. Definitely sell weeklies. Definitely sell weeklies. When things are busy in your life or you don't have that time, you sell monthlies. I'm a school teacher. Right now, I'm at work. When I have free time for work, whether I am done with my prepping for the day or whatever it is, I can take some time to manage my options. So I'm primarily going to be selling weeklies right now. I have that time to manage them. But in the summer, when I'm YOLO living on a beach, when I'm traveling to see my friends, when I'm spending time with my kids, the last thing I want to do is sit at my computer and monitor my options. So in the summertime, when my time is limited, I sell monthlies primarily. Mostly because it just gives me a little bit more flexibility at the cost of premium. Right, guys? The greatest true value in our life is time. So in the summer, I look at my return on investment and say, you want to know what? I am willing to make 20% less selling monthlies for the next 2 months while I'm off from summer. And instead of making that 20% in premium, I'm going to spend that time with my family and enjoy the things that I love to do. I'm going to trade premium for time. That's one main reason why in the summertime I switch to monthlies. But you are absolutely correct. Once again, if you sell weeklies, you are probably going to make more money. Here's the other side. All right. And this is Camp Aaron Azevedo. If you are balling, you're killing it. You're not wheeling with 1 or 2 stocks. Aaron, leave in the chat, how many stocks are you currently wheeling with? Or how many stocks do you have calls out on? Because it's a bunch. And back to that management, maybe, like I said, you have some free time and you can manage your wheels. Well, maybe you get to the point where you can't manage all of these plus. Aaron Azevedo has 35 plus stocks that he's doing this with. So if he was selling weeklies, that's 35 different strike prices. That's 35 share prices. That's 35. That's a lot of work. That's a lot of work. So if he can, once again, manage his time and maybe sell a couple weeklies if like the premiums are really good, but for a large majority of them, he can sell them monthly. And like I said, it doesn't have to be all 35 or 1 month. He can stagger them. You know, he can pretty much maybe have like 10 of those 35 expiring this week or whatever he wants to manage. He might have them spread out over 6 weeks where every single week is 6 options that are going to expire. So therefore, he has time that he only needs to roll and keep managing a small percentage, right? And then you really realize that like, wow, yeah, I did take a really, really big cut by doing monthlies instead of weeklies. But then you realize how much easier it is on your time. And you start saying like, I don't need to make 100% return every single year. I'm going to get some of my time back and I'm going to give that time elsewhere, whether it's growing my business, spending time with family or spending time with myself. And I'm going to, I'm going to switch to monthlies instead of weeklies. Those are really the two main things, but they're all based around time and managing your options. If you have all the time in the world and you're sitting at your computer, sell weeklies, please. But if the amount of stocks that you're doing this with is growing to a point where you feel stressed, like we said with any investment, if you go to bed at night thinking about your investments, you probably are too leveraged or to have too many of them. We want to get to the point where we sleep like a baby. That's our real goal. So, Sean, I hope that answered your question. Maybe it shocked you that I said go ahead and sell the weeklies, but that's the thing that I think you were missing. You were missing that management. And also too, as a beginner, I'm not saying you're a beginner, but as a beginner, we sometimes don't realize that, wow, I'm a beginner. I'm doing this with 2, 3, 5 stocks. When your portfolio size grows and you start adding all of these, you can get to a really, really large amount of managing options. Get him, Robin. Get him. 35. That was an awesome question. I do get that question a lot. That's going to be a little behind the scenes, guys. There gets to a point where you get asked a question so often that instead of writing, and like good questions that you want to answer the people, it gets to the point sometimes where you answer it so often that you just make a video. I've just made videos just to like answer something that I always have to write out that I could just click a link. I wish I had another one off the top of my head, but this is going to be one of those where I can just like probably every other day or so, I'm just going to be able to link that video. That clip is definitely going on the main channel. It might be tomorrow's video. Everyone's fighting for Aaron's business. Yeah, everyone wants to manage Aaron. Aaron, you need a virtual assistant just to manage your particular options. All right, let's see. Let's keep going. This is another question. And guys, like I said, I also want to say if you're in the chat and you left a question, I'm going to play them all tonight. I'm going to be able to get to them. I am going to give full disclosure. If I listen to one, because I have not heard them yet, if I listen to one that I don't think I can answer like well, or I think that I can get resources and answer better, I'll do it again on the next live stream. So I might say it's nothing personal, but like if I know that I can bring up illustrations, I don't have my whiteboard out and stuff like that. So if it's one of those types of questions, I might skip it. I just want to say that I don't know if that's going to come up, but I don't want to play one and be like, sorry, dude, not answering that. Suck it. I'm not going to do that to you. So let's dive into the next one. Once again, guys, if you're in the chat and you have a question or you think I could talk about something for 3-4 minutes, please give me the content. This next one comes in from Chris Bradley, who I believe has left a voicemail before. So thank you so much for being a repeat customer, guys. I really, really do love that, these questions. Oh, and I'm seeing, I just see up a voicemail or two. There's a question from the Discord coming in from Jonathan. Awesome. All right, guys. So here's a question from good old Chris Bradley.
Hey, Brad. It's Chris again. Thank you for everything. You helped me a lot with some of my wheeling strategies. But now I have another wheeling question. Since I'm wheeling a stock I don't mind owning, would it be more profitable to ladder my covered calls? I've been going all in on weeklies at 20 contracts each week. Recently, I heard of laddering, and if I sell covered calls, 5 contracts a week, I can stagger them so that after 4 weeks, all 20 contracts would be in play, and each week I'd have 5 contracts expiring that had the premium of 1 month. I haven't sat down and done the math, but as long as I don't mind having my shares tied up for a month, it sounds like it would bring in more money through premiums overall. If this is more profitable, I have to figure out how to pick the right strike price, of course. I just want to know what your thoughts were on that. I like going all in every week, but if I can make more money with the ladder when it comes to covered calls, that would be pretty cool too. Anyway, thank you.
Awesome question, Chris. And I had not heard that before. So obviously after listening to the last one, if you are in here, a lot of things apply to the differences between weeklies and monthlies. The laddering, I'm for that. Okay. I am for that for a number of different reasons. I think of it as a little bit of diversification. And for anybody that doesn't really understand what he was saying, so he has enough shares where he can write 20 contracts every single week. Okay. So he has 2,000 shares. Is that right, math? Sounds about right. Okay. So instead of saying, I'm going to write 20 contracts at this strike and this expiration and this one premium, maybe I want to write 5 of them and then wait a week and then see what the premiums are doing and write 5 more and then make maybe another one. And you could do that with maybe all of them having an expiration that's out past, however many ladders, how many rungs do you want on that ladder? So the first one isn't necessarily going to have an expiration of 1 week. The first one might have an expiration of 5 weeks. Then the next one, 4 weeks, 3 weeks, etc. So they all kind of finish around the same time, or maybe they don't all finish at the same time and you want just an ever flowing, every Friday I have 5 contracts that are going to expire. I haven't done the math either. And I do not own enough shares of a stock to have like multiple contracts. The most I think I've ever written was probably with Vuzi, where I wrote a couple. Maybe if you're in the chat and you can add some value here. I personally, I think if we did the math for like the reasons that we just talked about in the weekly discussion versus the monthly discussion, I think it would be more money. I think there'd be a greater chance for premiums to go in your favor over the course of time, kind of like dollar cost averaging, if you will, right? If you sell them all, that's the most that you can make, right? You have fixed your income because they're all going to be at the same premium. So you can do that weekly, but still, because how many times have we seen the premiums fluctuate from week to week or even day to day? So I think personally, I would try it out and I would get back here in a month and let me know, because I've never personally done that, but I've heard of it. I know people do it. And I also know that people do it to protect themselves a little bit. Like, kind of like you don't want to get a sign on all your contracts. I know you don't like need to own this stock. If you're trying to dump it or like your basis is so high and you're ready to move on, then hell yeah, just maybe go all in. But you kind of, by dollar cost averaging per se, you're also like diversifying yourself that you can lose 5 and then maybe go over to the put side, and maybe get this wheel. But it sounds like that's also going to come with a lot of work, right? I like how you said, I'm all in for going all in. Me too. If I had 20 contracts and I just wrote 5, Shit, those other 15 would burn a hole in my pocket so deep. There's no shot. I don't have the patience. I wouldn't be able to do it. There's no way. I'd be like, all right, yeah, I'm going to sell 5 this week. I'm going to sell 5 next. No, I would sell 5 on Monday. By Thursday, the other 25 would be gone. they'd be so gone. So I hope that answers it, because that's really all it is. I would say try it out and let us know. All right. The best way to learn is to fail and figure it out. So maybe it'll suck, and then you'll be able to be like, guys, don't ever do that. Or maybe you'll make a poop ton of money and you'll be able to say to us, hey, I'm glad I left that voicemail. I just tried it. There's no reason I wouldn't try it. To add from the chat, I think you can make more money at laddering because you will collect more money for further out options. That's also true. So the premiums, depending on your expirations, those are going to be different as well. So I really think you can. And not to mention, you'll be able to roll those. And yeah, because if you're going to write calls, the premium is going to be higher the further out oh yeah. I would try it, man. Please try it, and please let me know how that's going to go. Charles Brennan has some Vuzi puts, $10 strikes, so do I. Which right now I'm down 33% on that. And mine expires, my $10 put on Vuzi, I'll show you, just so you don't think I'm talking out my rear. As you guys know, I do not talk out my rear. Right here, down 33%. Let's bring this option up. All time, it got up to $1.50. All right, not too bad. But that would have been bad for me. I was down $40. So we want this to go down and down and down to 0. So right now I'm down 33% on the position. Not too bad. I'll take it. We got plenty of time on that one, so I'm not too worried about it. Yeah, Aaron, I agree with you. That's kind of what I would do. 5 is a lot. Yeah, I mean, how many leaps do I have right now? If we look, I have 1, 2, 3, 4, 5, 6, 7 leaps because I have 2 Vuzis. Like, I treat those 2 Vuzis separately because I write different calls. I kind of ladder my Vuzis. So, like, I have 2 leaps options with Vuzi. I don't sell 2 contracts. When I do short calls, I don't sell 2 contracts. I stagger them a little bit, and that's kind of, I guess that's kind of laddering. That's kind of what I would do. But even these 6 leaps that I try and maintain every week, it's like getting to my limits. Like there's some of them that I would love to maybe even get rid of and just kind of lower my time. But that was like summer mode, Brad, when I was like, I don't want to work. I don't want to do any of these right now. But now that I'm like back and have some time, I can just chill and make it happen. I might just continue with my 6. I might even add some more. The next question comes in. Oh man, I apologize. I do not know how to pronounce this. Hopefully you say it, but it's spelled Queek. So I would say Queck, but hopefully you'll say it. Let's see what kind of questions you have. And like I said, I apologize if I mispronounce your name. Hopefully you say it so that I don't screw it up in the future, guys. This question is about a minute long, so here we go.
Hi, I'm Greg. I'm from Singapore. I have a question regarding the LEAPS option. I know for LEAPS option,
Did he say he's from Singapore? That is awesome. He said his name quick. I don't know what it was, but he said he's from Singapore? People from Singapore watch this channel. Oh my gosh. All right. Well, thank you for listening. It's Singapore. Yes. All right.
Break-even is the strike price plus the strike price.
Oh, I got to go back because I missed what he says. Sorry, guys. I'm all over the road.
Option. I know for LEAPS option, the break-even is the strike price plus the premium paid, and the max profit is just the price that you close minus the break-even price.
I want to stop. I'm going to listen to the rest of it. But if you are watching, or if this makes it to a live clip, that is incorrect. With the LEAPS option, your max profit is unlimited. It's not capped. If this was going to be turned into a poor man's covered call, yes, there's max profit. And maybe that's where this question will evolve. But I wanted to stop right there. When you buy an option, your max loss is the premium that you paid. Your max gain is infinite. If it's a call, right? If it's a put, your max loss is when that share crashes to 0. All right. I wanted to say that right away.
So my question is, I know that presuming the delta is the constant, and for the delta, if let's say you buy the leaps option at 0.75, and for delta, for my understanding, is per dollar gain, you earn 75 cents. So let's just say if the final amount, the stocks gain by $10, $100, can I say you can add the max profit, the close price, minus the break even, plus the delta change of $75, let's say if the delta stay constant? Thank you.
Okay. So the question didn't evolve into the poor man's covered call. So let's nip this in the bud. Okay. Because the question seemed to be about how can we find the break even with the leaps price? It's infinite. Okay. Now, how do you find like your current profit? That's going to be the intrinsic and the extrinsic value, which leads to the premium. And it's the difference between the current premium and the premium that you paid if you were to sell to close. And as we approach expiration, extrinsic goes to zero, and you are left with just intrinsic value, which is why you can exercise or sell to close. The deltas and stuff have nothing to do with the break evens. All right. The Greeks are not going to have anything to do with the break-even price. The Greeks only tell us how the premium or the value of that option is going to change. Okay? So if I miss something, I'll love a follow-up. But what we need to know, when you buy an option, when you buy a call, the max profit is infinite. When you buy a put, the max profit is the strike price to zero times 100 minus always the premium that you paid for that option. I hope that helped. That's definitely something that we need to know. All right, we'll dive right into the next one because it's out of the Discord, so I definitely want to get to this one. And then that might be it for tonight. I have three more. Actually, Charles Brennan's in here, so I'll do Charles, especially if Charles is still here. Jeremy and Jack, if you guys are in here, could you let me know? Because Zach Horn and Jeremy, if you guys are in here, let me know. I'll make sure I play it, but if not, then I'll make that for another one. But this one's going to come from Jonathan. He's inside the Discord, Grizzle Sirens on Discord. So anybody that's in the Discord, now you get to put a voice with that name. I'm going to get a voice with the name too, because I have yet to hear it. Okay. Yep. Charles is here. So Charles, I will play your voicemail next, bud. But right now, Jonathan.
Hey, Brad, you've talked before about how you don't let options that you've sold go out into expiration. You buy it back before the expiration date. I wanted to know why that is. It seems like to me it would make more sense to let it go out into expiration, assuming, of course, that it's out of the money, so that you collect 100% of the premium you got initially. And I just wanted to know why you choose to buy it back before the expiration date. Awesome. Thank you for the content, man. Keep it up.
Awesome question. And a question. All right, Chris is here too. All right, buddy, I'll get to you. So awesome question. And one that I can answer. It's kind of, I guess, the theme of this evening. To answer the question is it has a lot to do with time but I think even more profit. All right. So let's look at the options. Essentially, you're asking me, why not wait and get 100% as opposed to you close. If you do not know, I like to close my wheels at 75% profit. So if I sold it and got $10 in premium, when the value gets to $3, I give that $3 back. I keep $7. That's the end of the day. With my poor man's covered call, even smaller, like 40%, right? Because I have to worry about that leaps option. Why not wait for the 100%? Here's why. Let's say we have an expiration of Friday. Barring major movement in the share price, the value of that option, because of theta, because of extrinsic value, the value of that option is going to be as close to zero as it really can be in relation time-wise to Friday. I'm not saying that the value is not going to drop more by Friday. I'm not saying that. What I'm saying is that the amount it's going to change between Wednesday and Friday isn't worth it for me when I can roll my option on Wednesday, roll it out now instead of like instead of Monday to Friday, like a 5-day expiration, which is going to give a certain amount of premium, the further I go out, the more premium I expect to collect. So instead of looking at the option as a weekly that has a fixed Monday and Friday, and then the option then goes on to the next fixed Monday and Friday, what I would ask you to try and do is think of your weekly options on a 2-week timeline or like a 10-day timeline. Because when you do so, you can now look at the profit over that 2 weeks. Now, granted, and once you get to that 2 weeks, you'll see this, and this is why I've established this kind of mindset of let's close and move. Because when you start to move it out to a month and even further, you really see the massive difference. Let's go back to that $10 strike. On Wednesday, it's 75%. So I got that on Monday for $10, 5 days away. All right. What happens on Wednesday, the value has dropped. Theta, the share price, whatever. It's dropped to $3. So now I look at two things, and here are the two things that you need to think about if you want to wait till expiration or roll. You think to yourself, all right, do I want to wait till Friday to get $3 more? Or if I look out to the following Friday, what is that going to be? Because let's say now that you've added 3 days, right, on top of the standard 5 weekly, now what you've done is just collected some more premium. Now, how much more? We don't know. But essentially, right, if it's more than $13, you win over that 2-week time frame. Why 13? Well, because if you got this one for 10, you can expect next week's probably going to be about 10, right? So you can do a 10 and a 10 and hope everything works out perfectly just the way you want it, and you'll make $20. Or you can take 10, give back 3 on Wednesday. Now you're at 7. And then as long as next Friday out is 13, you got the same exact 2-week premium of $20, but you eliminated the chance of some BS happening between Wednesday and Friday and screwing up the 1-week option. It's really protection. When you write calls, you have to think in the back of your mind, collect premium, get to a profit that I want, put some money guaranteed in my pocket, and get the F out, and then roll and do it again. All right? And from my experience, when I get to that 75% mark, whether that's Tuesday, Monday, whatever, when it gets there, when I roll to the following Friday, I collect more premium for that larger gap in time than if I did 2 weeklies at the same exact price. Do you know what I hope that makes sense? Like going to when do I go to expiration? I go to expiration if I'm losing, right? If you're leaping, I never close leaps. I mean, not leaping. If you're wheeling, I never close wheels ever because I don't mind assignment. I've picked my strike price right. I've picked my everything's done right. So I don't mind getting assigned. So my wheels are always going to go to expiration. Always, always, always. Granted, there are some rare cases like if the stock price plummeted and the value of the option went to 0 on Tuesday, yeah, I'm going to close it. But my wheels, I'm going to hold them. Okay? So this close at 75%, I mean, and this is out of the money. When I say I'm never going to close them, that means like if I have to like protect them, like I don't want to get assigned. But like I said, 75%, I've seen so many times, not only from me, but from other people, that when I thought I was so golden and I thought that I had a lock for the thing to expire worthless, and I was like, I'm going to get 100%, baby, let's go. And then like Wednesday afternoon, news came out and the share price went up and I'm like, ooh, damn it. Then on Friday, it opened after pre-market. It opened so much higher. And now my option was like more than I could buy to close at a loss. And that can happen after market because we know with these options, we really can't close them off hours. So there's a lot more volatility and danger in off hours. It's happened. There's people in the chat, I'm sure this has happened to as well. You think you're golden on Wednesday. You think you're golden Friday morning. And by Friday afternoon, you're up shit's creek without a paddle. So you had to add 3 days of stress and time for 20% more profit. You know? Now, if this was the last wheel you were ever going to do, you were never going to sell another call ever, yeah, get your 100%. I don't personally, though, think of my options as start and end. I think of my options as start, roll, 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 roll. Then when I'm done rolling, then it comes to an end. Or start, assignment. Start, assign. You know what I'm saying? So look at that next time. Look at what you would have to buy to close. And then on that same exact time, in that same exact instant, look out. Now, maybe something crazy happened where you got that $10 on Monday and now it's at $3 and you look out there and it's only like worth $6 now. Okay. Maybe you want to wait a little bit and see if you could change the value for that future Friday. I very rarely have seen that happen. So that's kind of the main reason. The main reason is to protect myself because I know that things can go wrong. And for me, right, was it Warren Buffett that said, my faults are going to be due to omission, not commission. If for me, I would rather, take out 75% profit and lose 30% in the next 2 days by omission, by getting out and not being a part of it, than losing by commission where I get greedy for 30% and then something happens and I lose the whole option and the whole shares and everything. That's really it. So if you have ice in your veins, sheesh, hold it till expiration, ride it out. But for me and my experience and the experience of the people in my Discord, I think people just get a lot more happy when they think of it as a 2-week. Your options are not weeklies or monthlies. Think of them as like 10 days or 2 weeks. I hope that answered your question, bud. Right on, Jeremy. I'll make sure I answer your question then, bud. Mm-hmm. Yeah, Aaron, it's happened to a bunch of us. It has happened to a bunch of us for sure. All right, so Jeremy and Charles are both in here, so we will definitely answer those two. Hopefully they didn't troll me. And then if Zach Horn is in here, then we'll get to that one last, but we're doing good. And like I said, guys, questions in the chat, please answer them. I think we had a high of like 33 people in here watching. That might be a PR. I don't think we've ever hit 40. Hit the thumbs up button, guys. Hit the thumbs up if you'd like. That would be awesome. So here comes good old Charles. And guys, you can troll him if the question sucks. He's here in the chat. Just write him out. Tell him he's a loser. No, don't do that. I'm not for bullying. Unless it's your dad. Then it's funny.
Brad, how's it going, man? Okay, so I have a question for you. First of all, thank you so much for all you do for all of us. I've watched all your videos, and they're the bomb. Anyways.
You have not watched all my videos. There's too much time. I'm calling fact check on that. You have not.
So my question to you is, if I have a cash secured put and it's rolling along and it's going up, do I sell it, say 50, 60%? I'm sorry, do I buy it back at 50 or 60%? Or do I just wait on it? What do you think? I know if it goes down, I want to wheel it into, put it in the wheel. And I just want to know, what do I do with that? It's kind of a tricky thing for me, and I'm not sure. So if you could answer that would be awesome. Thanks.
So Charles, we kind of just answered that, right? We answered why I close. So the percentage, though, is completely up to you. That's completely up to you, all right? If 50 or 60% is what you kind of want and you're happy with that, think about yourself to this. Think about this to yourself. If you'll regret not taking the 50, then 50 is your number. If something goes bad and you say to yourself, shit, I could have taken 50. There was a day where I had my finger on the mouse, I could have taken 50. Then that's your number. If you're like, I lost 50% of it, not a big deal, then maybe you want to go up. But for me, I just got into the 70% because 75% is a really easy number for me to do math in my head on. I can take the value of an option, divide it in two, and add 25% back. Like, that just number is very, very easy. That's where I got to 70% as opposed to 60. If I did 60%, I'd have to be like, all right, 50 is it divided by two, and then I have to take another fifth of that. Like, I really just chose 70%, 75% because it's easy math for me to calculate in my head. But once again, I'll reiterate what I just mentioned. And if you have a follow-up, you're here, you can ask. Close it out. If you have a cash secure put and, right, we know the share price is climbing, we're getting close to expiration, you have unless this thing is shooting up so fast and you picked a strike because that's what you found the value of the thing to be. Like, say for example, you did your analysis and you're like, this is why we sell cash secure puts, right? When we would want to buy 100 shares at a particular price. So maybe you got a price in your mind, it's $50. And $50 is your hard stop. That's pretty much the highest price that you'd buy 100 shares for. Well, now it's climbing 57, 58, and the value of that option, you're going to get 50% back. Well, to roll and get any sort of premium and keep profiting, you're going to have to move your strike up. Or maybe you're like, shit, I'm not paying 55. I don't want that strike. That might be an instance where you have that put and you ride it out a little bit longer to expiration. And that's something we really didn't even mention in that previous video and that previous question. On the put side, you have to think about that strike price because that will be the price that you have to buy shares. Now, if you would like to buy the stock at 58, you have no problem at 58, but you wrote 50, you're like, well, now you have $8 of strike leeway. Take the 50%, buy to close that option, and move your strike up to 55. You're probably going to do better. That's rolling up and out. You're probably going to profit even more for the reasons that we've discussed previously. But if it's at 58 and you're like, no, I don't want to buy 100 shares, or I don't have the collateral, the cash. I only have $5,000. I can't write a 58 strike. That might be a reason why that you might want to hold it. But I'm a firm believer. 50 is a little low. 50 is a little low if I'm wheeling, right? I'll probably stick around, hang out for 50 because 50% more is a lot, right? But for me, 25% isn't generally worth it. And also 25% seems to be a really good number that I can make up rolling out into a future expiration. It might be hard to make up 50% rolling that out to a future expiration. You dig? Cheers. Oh, CB, I did talk about that. It's in the, I did do that voicemail. I am going to timestamp all the questions. So some of them are going to make it to clips, but you might not want to wait. I definitely did that question. If you want to go back and look at the replay, Chris, you were the third question. So maybe 20 minutes in or so. We had Kyle, Sean, and then we did Chris. So if you want to go back, if you get to Quek from Singapore, then you went too far. So if you want to go back, but I'll definitely put the replays in there. Sorry you missed it, bud. But I did answer it. It was a very good question. It was a good question. Zhao, take it easy, buddy. Take it easy. All right, guys, let's keep going, right? Let's keep going. We got two. I know Jeremy's still here, so I want to do at least Jeremy's. And then we have one more, so I might as well just play his. Jeremy's got a question coming in. 90 seconds. You push it right to the limit. I think, isn't 90 seconds as long as you can go? I think that's as long as you can go. But thanks for the question, Jeremy. Let's see what you got to say.
Hey, Brad. This is Jeremy Nelson. I've been in on a few live streams recently, and first just wanted to thank you for taking your time to share some of your experience and knowledge. I've learned a lot already and I'm excited to learn more. My question for you is on the wheel strategy and how you manage both sides of the wheel. So as I'm looking at it, it seems like potential downside of the wheel is that only half of it is capitalizing on the appreciation of the underlying stock. So when you're writing a call, you get both the premium as well as some of the growth of the underlying stock. But when you're writing put, you only get the premium and maybe even lose out on some of the appreciation of the stock. So when managing each side of the wheel, it would seem like it makes most sense to try to reacquire and keep the shares as much as possible, maybe rolling your your calls so that you maximize gains through appreciation while writing puts with the intention of getting assigned as quickly as possible so you don't lose out on any of those that appreciation. I'm curious if you have any thoughts or recommendations on how you manage both sides of the wheels and how you pick strike prices and decide when to roll or how to manage assignment. Or if it makes sense just to skip the put altogether, maybe buy back your shares right away so that you can kind of maintain and keep those shares as much as possible. Thanks.
I'm glad you mentioned that at the end, because that's definitely one of the options. And it's funny, in my evolution of the wheel, when I first made the wheel strategy videos, man, maybe 2 years ago now, I started making them. I used to treat the call and the put as like equals. Then I learned a lot. I learned a bunch, and I really found some like hatred for the put for some reasons that you talked about that I definitely will reiterate. I started to hate the put, and I would do exactly that. When I got assigned, I would just buy the shares back because I wanted to own them. And I wanted to own them mostly, not even for their capital appreciation that you talked about. I wanted to own them because I was doing this primarily with the dividend stocks, right? And when you sell a covered call, you own the shares. And even if you have a contract out on them, you still collect a dividend. You own the shares until they're assigned, right? Which is kind of why you want to avoid ex-dividend dates when we're selling calls. And on the put side, you don't get that. So I'm like, why would I could get some premium, but I mean, all I'm getting premium wise, all I'm getting in the cash or put is that premium. Where if I do this and I sell calls, I get the capital appreciation you mentioned up to the strike that I choose. So I know, like, if I get assigned shit, I know I'm going to make this amount of money. That's awesome. Where on assignment of a put, you don't necessarily know that. So it's hard to like factor in that capital appreciation into your thought process. And you don't get the dividends. So I had some hatred for the puts, and I was doing that. Now I've kind of evolved to understanding the put side and finding more love for not necessarily the cash secure put in the wheel, but just puts in general. All right. And here's kind of what I mean. When I made these videos, I talked about how you can start anywhere you want with the wheel. You can start with the cash secure put, or you can start with the call. And I still feel that for the wheel strategy, I want to start with the call for two reasons. One, the things we discussed already: capital appreciation and dividends if you're doing them with dividend stocks. Here's another reason why I like to start with the call. Not everyone, you could just go out and just, boop, I own 100 shares. I'm just going to, you know what? I'm going to buy 100 shares today of this stock. We don't always have that. So instead of like saving up money for the collateral to buy the put or to write the put option, you're going to take some time and you're going to build up to 100 shares over time. This is an amazing time to educate yourself on other wheel strategies, ways to benefit the Greeks and things like that. It doesn't force you right into options trading. Okay. So you kind of like build up your 100 shares, you keep doing your research, and then you get all the benefits of it. So I still feel strongly that like with what I wheel with, I have most of the stocks I can go in. If I have the collateral to write the put, I can just buy the shares. So I'm just going to buy them, or I'm going to build up to them. I'm going to start with the call. When like this could be bad if it shoots up really high and we know like the con is you are going to lose, potential growth above your strike price. Okay. That definitely is a con. With the put now, I've realized that I love the put so much, or I'm learning to love it so much, and I think I'm going to do a cash secure put video soon, is I love that set it and forget it guaranteed premium. So outside the wheel. I never thought that I would write puts outside the wheel before. But as I talk to wealthier people, and as I talk to people that are just killing it in the investment game, I find out that instead of owning shares, especially in this like inflated bubble type market, they just have millions of dollars, literally millions of dollars of collateral out there. And they're guaranteeing themselves a return on their investment. And if for whatever reason it gets assigned, they got their stock at the value that they wanted. And then they could start the wheel. So to be honest, I've been doing puts long term. I've been selling puts expiration far out. And I'm going to do a video about this. So that's good. I'm going to do a video about it. And I'll tell you, like, because that guaranteed, I used to think that puts was like, I don't want to tie up my collateral that long. I said that. That's been a reason why I didn't like to put, you got to tie up all this collateral. Well, if you buy 100 shares, you got to tie up all that cash to buy the 100 shares. I don't know why I didn't like think of that. It was like so dumb of me. But if I wrote a put for 6 months out from now, and I knew the collateral I had to put up, and I knew how much premium I was going to return, I can calculate my return on investment immediately, and then I can multiply that by 2 to get my yearly return on investment. So take, for example, Intel. Or, yeah, let's use Intel because I have puts on them. I know it's already a value stock. Many value investors and value channels have talked about how it's a good value. Or a good value, especially a good value at a certain strike. So if I write my strike for $50, right? That means I own $5,000 in collateral. Okay. If I know that I am going to make, say, 8% back in premium, what that means is that I either get Intel at the price that I wanted, and I had to buy 100 shares, no big deal, the collateral's already out there, or it's going to expire worthless, and I guaranteed myself 8% return, which is a 16% annual return on investment. Now, I know there's a lot of YOLOs out there selling NFTs and things like that, but at my age, at 40 in March, I'll take 16% on my money all day long and twice on Sunday. So that's why I love puts now. There's definitely more opportunity to see your wins on the call side. There definitely are. And that's for, like I said, I'll reiterate, I would probably, the stocks that I am wheeling, there's a few. Now, am I essentially wheeling Intel? Yeah. But I started with the put on a 6-month timeline, right? I tied up that collateral for that long. I pretty much said, hey, how about I give you $5,000 and you give me 6% back? That's what I did. You know, and for a while when I was super excited about the wheel and I was hearing about all the numbers and I knew the numbers, I'm like, F it, I'm not taking 6%. I can get 10% a month. I'm not taking 6% over 6 months. F that. But now I'm like older and I'm like, let's start to hedge some of this money. I got this money in cash. Why not use that cash as collateral to guarantee myself 6%? This pretty much is that put video, I guess, without the math. Maybe I'll come in and drop the math. But yeah, without babbling and saying it again, I'm for the call side to begin the wheel strategy. But I don't hate the put as much. If in 6 months, Intel got assigned, okay, I would buy those 100 shares at $50 each. Depending on if I have to bag hold them or not, I'm going to write calls against it. And on the call side, this is another great thing about starting the call. You mentioned, like, how do we determine strikes? When you write a put, you have to determine what a fair value is. You have to come up with the strike price and the strike price that you think is best. When you sell calls, your basis is your line. That's it. It's done for you. What is your average cost per share? Make sure your strike is above that because then you automatically profit, right? So it's also great for beginners to start with the call side because your strike price is almost done for you. Now, if you want to get fancy and throw in delta and be like, I want to write my call with a delta smaller than 0.4 or 0.3 or whatever you want, great. But essentially, the long and short of the covered call is as long as your strike price is above your basis, good. Good. Especially if you factor in, like, if it's a dividend stock and you factor in, you know, losing a dividend, if you were in an ex-dividend date, don't write calls on the week of an ex-dividend date, but, you know, that's also done for you. So if you're a beginner, maybe you don't know how to value a stock. Maybe you don't know $50 is a good price for Intel. But if you build up and at the end you say, oh, my cost per share as I bought these shares over time is 52.50. Okay. Well, what should my strike price be? Anything greater than 52.50. And then when you get assigned, well, what should the strike price be on the cash secured put? 52.50, whatever that 52.50 was, so that your basis doesn't change, right? If you get assigned at $55, the put goes at $55. Now, sometimes if there's major swings, which we don't want to do with wheel stocks, you might have to back hold for a little bit. You might have to do it, you know? And if the strike price shoots up past your call and you get assigned, and you don't feel comfortable writing a call, or you don't have the collateral to write the call, then you got to wait or choose a new stock. That's happened with me. It happened with AbbVie. I used to wheel with AbbVie, and I had a call price that was way above my basis. The delta was like 0.3. I was happy, and AbbVie went like this, whoosh, shot up. And I said, damn, I don't have an extra. It went up $6 past my strike. I didn't have another $600 to write the call. So that was the end of the day with AbbVie. Kept them on my watch list. Said, hey, if it comes down to my basis, maybe I'll start to write puts on it again. I don't think it ever did, or I moved on to greener pastures. But that's a great question. It really is. And that's really what you need to think about. Wheel, I'm still for starting with the call. It gives you your strike price. It allows you to collect dividends. And it allows you to find out exactly how much profit you are going to take if you get assigned. But please, especially if you have, or you're sitting on cash, or you're trying to diversify a little bit, don't fear the put so much. And think long term. Think to yourself, if I do a monthly put, if I write a cash secured put, right, and I get 2%, that's a 24% annual investment on your money. That does not suck. Yo, Day Tripper. Debt free, man. How long have you been a subscriber? Oh my gosh. Forever. Mark, how you've been subscribed? Congratulations, man. Yes. Put the stats in there. How much you pay off? That is awesome. Yes. That's like some of the best things. I mean, I love hearing about, I'll tell you this, guys, and this is no bullshit. If you profited $250 from a GameStop call in February, I am so happy for you. I'm so happy for you. If you pay off $1,000 of credit card debt and become debt free, I am 10x more happy for you. Seriously. Getting out of debt, oh my, the weight that Mark must feel lifted off his shoulders. Getting out of debt is I don't want to yell, and I don't want to sound like I'm being angry. Getting out of debt, because there's so much bullshit that's online. Getting out of the debt is the single best thing you can do to raise your net worth. Consumer debt. I'm not paying off my mortgage. Interest rate's too low. Consumer debt. If you want to put a percentage on, you're just making excuses. I'm going to pay off everything that's over 5% interest. Whatever, make the excuse. Get that free. How many times on Instagram have I posted that graph where I sold off $16,000 worth of stocks to pay off $16,000 worth of debt, and everyone called me a donk? I'll bring that up. I have to, because this is so important for people to understand. If I can bring this up without showing without showing everything. You guys have seen me post that, where it's like I lost like the littlest amount of money, and I don't know my personal capital password. Guys, if you don't use personal capital, there's a free link. It's a free app. You should use it. It's been awesome. Pretty much you put in your bank, you can link your bank accounts and stuff, and it just tells you, it just gives you everything. It's awesome. It's free. Literally free. Let me go back. I don't know if I can do this. Oh my gosh, custom. Let's go back to June of 2019. Where did I pay off? Sorry, guys, I'm looking at my computer over here. Okay, wait, is this it? When did I pay off my debt? I paid off my debt in... I forget. I became debt-free in September of 2019, I think. Oh, is this it? This is it. Okay, cool. Hold on. Let me show you this. Was this it or this is September? How much did it drop? It went from... Yep. Okay. So this is my... This would be my net worth. Let me bring this up. I'm just trying to make this bigger so like I don't show all my personal information. Because personal capital is personal. It's really lame, Brad, I know. All right, maybe I'll just put my picture up here. Okay, I can do that. All right, look at this picture real quick. This is how important it is to pay off your debt. I, right here, sold off my stocks. So my net worth at the time was $80,472. Maybe you can't see that. I don't think you can see that. Hold on, let me just... Just my account numbers are up here, guys. I don't want to show them to you. If you can see my account numbers, please let me know. So right here, this is the day I decided I was going to sell off all my stocks and become debt free. I had a net worth of $80,472. Damn. Okay. Sold off my stocks and lowered my net worth to $65,421 on 9/16. So 9/15, 9/16. This 9/17, this raised my net worth back up because I paid off my debts. Let me see. Investments. That's what I needed. Here it is. Yes, Brad. Okay. This is what I wanted to show you. This right here is when I paid off my debts. So this is just my investment portfolio. I had 93,326. Okay. It dropped. I paid off, and this is retirement and everything. So like I was able to sell off $15,000 of liquid assets. Guys, it took me, when was this? 93,326. 93. On 12/24, Christmas Eve, I broke even. So 1 quarter it took me to make back that. And if we look here, so like August, you don't even see that anymore. This is it. This is it right here. So this was my decision to go debt free, and everyone told me I was a donkey. It means absolutely nothing to me. Everyone's like, oh, you're killing your financial future. Oh, time in the market. Guys, pay off your debt. It does nothing. Keep living the rat race. It's not really that cool for me. Oh, man. There's so much stuff in here. Have you ever wheeled a REIT? No, I've never wheeled a REIT before. Sorry, Josh. I've never owned 100 shares of a REIT to wheel. And because REITs we really do for dividends, and I didn't want to lose in the cash secure put. If I'm going to own a REIT, I'm just going to go for it. Right on, Jeremy. Thanks for answering the question, man. Ryan, I've watched them all. I have many of them unlisted. I don't even know how many does my channel say that I have? Because when I look, it shows like all my privates, all my unlisteds. Like, you'd literally have to be around as long as Day Tripper to have seen every single one, because so many I've made unlisted. But I think he's been a subscriber now for probably at least 2 years. He probably was around when I had like 3,000 subs. Which, with this current change in the markets, I don't even know if I'm going to get to 100,000 ever. Our house is worth 360. Yeah, Mark, pay that down slowly. If you want to get rid of it, and we've talked about this on the Average Money podcast. If your investment portfolio ever gets to the price of your mortgage and you want to be mortgage free, just just like I just did with debt. I'm glad it looks like you guys are chatting about something. The Fed meeting. Oh, there was a Fed meeting. Guys, I was oblivious to the markets last week. Oblivious. I had no idea what was going on in Austin. Even you'd think that like a 1 hour time zone difference is like nothing. It screws with my brain so much. Looks like the virus crashed in March 2020. Exactly. How fast we just boom, boom, boom. I did that last summer, debt free now, thanks to the stock market in part. Yeah, I mean, the stock market's good, but the only guaranteed way to increase your net worth is to pay off debt. That is the only one-to-one comparison. It's you pay off $1 debt, your net worth has to go up by $1. It's the only guaranteed way. Thanks, Mark. Yeah, we had a really good February crew. Now, what's it at now? I'll show you. You guys always hear about YouTubers whining. Or maybe you don't hear us whining. I mean, we whine. But I'm sure you've at least heard like YouTubers be like, oh my God, the world is coming down. You know, let me show you this. I'm an open book. Hold on a second. I'll show you some things. Why we're complaining about this. Or like, and know this. Mine is not bad. Okay. Currently right now, we are sitting at 90,617. Mark, I sold the brewery, bud. Yeah, awesome. Over 200K. Yeah, I sold the brewery. Still pretty in there. Chris, I don't know anything about the Evergrande to speak intelligently about it. I've seen Marco posting a bunch, but I haven't got there yet. That'll probably be something I research now that I'm back. So here's analytics. So the first one is over the last 28 days. Like I said, you guys, this is full disclosure. But which kind of looks the same. We say I don't really post that much, but I hover anywhere between like this past week when I didn't post a video in the 4,000 views per day up until like a good couple of days when I post is like 7 to 10 a day. Okay. If we look at the last 90 days of views, it doesn't really look like it, but there's a little slow. I've been pretty lucky. But it looks like I've been kind of steady, but that's because I crashed quicker than the bigger channels. Like look at the last year. This, guys, was the madness that was January and February. Like it was stupid. It was nuts. Like at some point in January and February, I was making $500 a day in just AdSense. So when you're a full-time YouTuber and you start seeing this, and their numbers are double than mine, and then you go down to today where I made 127, like that's a really, really, really big deal. So, and like subs are even worse. Like, look, this is when I thought I was going to have 1 million subscribers by the end of the year. You know, I'm like 1,000 subs a day. I'm going to be, and this is, I think when I hit like 60. What was February 4th live count? Let's see. Last 365 days. Oh, let me do this. So in like, oh gosh, February I had like nothing. February I had 37. So when I had 35,000 subscribers, and this was that February bump, I went from 34 to 50 in like a month. I was like, oh man, I'm going to hit 100,000 by the end of the day. Wrong. I think now I get like 40 a day, so it's not that big of a deal. Yeah, Mark, I'll always be a teacher, some shape or another, but I am still teaching high school physics as well. Oh man, one more listener, and we get to 40. Have you ever heard of thoughts on dividend capture strategy? Yeah, Ryan, I don't do it. I don't trade dividend stocks. I know what it is. For those of you that don't know what dividend capture is, it's just really to me shady practice where like you find the next dividend date, you buy the shares. You get the ex-dividend date to get the dividend, and then you pull them out. It seems like a lot of work. People are busting my balls still on the regular. Come back to dividends. Can't believe you left dividends. When you find out about the wheel strategy, and when you find out about collecting premiums, you will never think of the word dividend portfolio ever again, in my opinion. Ever again. ever again. Because I used to have dividend stocks in a dividend portfolio. And I'm not going to lie. My first dividend, when I got that thing and it was like 6 cents, I was amazed. Passive income. I was amazed. When I first got my first like $50 one from my Roth IRA, oh my God, $50 effing dollars this quarter. Then I learned about the wheel strategy and I'm like, $50 every day. Let's do that some more. And then in the first 3 months of trading the wheel, I made 1,000 times the dividends I made on the stocks I was trading the wheel with. And I'm like, I'm out. I stopped focusing on dividends. So that's it. No more dividends for me. Yeah, personal capital's dope. Yeah, 249 videos. I got a lot more than that. Let me see. I think it should tell me here. You guys can see as well. Let's see. Content. Scroll down. Yeah, it's hard. I can't see how many exactly I have. I have a lot of videos. A lot of them unlisted too. A lot of them unlisted. Catch up, Ryan. Catch up. Not doing options in retirement, but I'm thinking about it. My retirement's so set it and forget it. I don't want anything to do with any sort of additional needed risk. It's just not worth it to me. Call, debit spread, deep in the money. Out of the money sell, expiring several months. Instead of leaps to reduce costs, are there cons? Yeah, cons is you don't have enough time for your leaps to go right. So, sorry if I'm pronouncing this wrong, but to me it looks like Wayner. Wayner said, is it worth buying a call debit spread? So essentially a poor man's covered call, expiring in several months instead of the leaps expiring in more than a year. What are the cons? The cons are the longer out in expiration you go, the more time you have. When we buy options, we need things to go right. So that just gives you more time. That's really the only con. More time. Theta is going to be greater because of that time. Yeah. Leaps is just, it's set and forget it. And you just get the same amount of leverage. And as far as the cost, remember, most of that cost is coming in the form of intrinsic value that hopefully, if things go right, you're going to get back anyway. So thinking about trying next month with AT&T. I'm out of AT&T right now. Is it because dividend stocks have less premium? The reason that dividend stocks tend to have less premiums than growth stocks is because of their implied volatility. So the value of an option is built around two things, intrinsic and extrinsic value. Intrinsic is the difference between the share price and your strike price. So if you take that, multiply it by 100, that is how much you paid in intrinsic value. And that's the guaranteed amount of money you'll get if you sell to close. Where the extrinsic value is implied volatility, how volatile a stock is, how much time you have till expiration, theta, and those two things playing together nicely. So as implied volatility goes up, the value of the option goes up. As time goes down till expiration, extrinsic value decreases to zero at expiration, and you're just left with intrinsic value. So that's generally why they tend to be less, mostly because of their implied volatility. Dividend stocks are kind of like flat, not a lot of implied volatility. I mean, the debit spread within a year, like January 22. That's what I mean. Same thing. You could do if you do the debit spread, which is a poor man's cover call, and you do it for and if you want to do the short call for that distance too, that's fine. Like you don't want to sell reoccurring calls against it. Same thing. I mean, if I'm going to do a debit spread, I'm going to work with that leap. So I've never just written a debit spread in the hopes of like the short call getting assigned or the share price ending up in between the two, right? Where the short call will expire worthless and then we just exercise or sell to close the leaps. I've never bought a leaps with that kind of goal in mind. When I buy a leaps, I want that thing just to go to the moon. That's what I want. All right, guys. So we do have one voicemail left. It's only 24 seconds. So I can't just leave one on the table. I know we did a bunch tonight. Thank you guys so much. We've been on for almost 2 hours. I do have one more, guys. You've heard a bunch of voicemails tonight, and hopefully you see how much I love them. The link is inside the description. I think it's the first link. If you have a question, don't be shy. There's no dumb questions in here. I said worst comes to worst. It'll either be talked about. I'll reference another video. But if you have a question, don't be shy, please. I beg you. Let's take a listen to what Zach has to say, and then we'll get you out of here tonight. Loading. Refresh. I'm going to refresh. Let's try that again.
Hey, Brian, just was curious if you...
Hold on a minute. Hold on a minute.
Used any technical...
Oh, well, I meant to go back to the beat. Hold on a second. Did I just get trolled?
Hey, Brian, just...
We'll keep listening. But Zach, my name is Brad. It says it in the title of my YouTube channel. You clicked a link that said Brad Finn Live. Leave a voicemail for Brad Finn Live. I'm going to play it anyway.
Hey, Brian, just was curious if you used any technical analysis with your option trading, for instance, bullish pennants, and time them accordingly for price acceleration, or have you seen any of the new stuff on fractal theory? Thanks. Bye.
By the way, the title of this video, I'm putting it on the main channel, and the title is going to be exactly what Robert said. Who the F is Brian? So, Zach, to answer your question, I think before when I was reading them too, I think I said the names wrong. To answer your question, I could tell you're new to the channel. That's fine. And I know because of your question. I personally do not know that much about technical analysis. I'm trying to learn. But I'm only trying to learn to know. I don't think at my age, my net worth, and my investment portfolio, I'm ever going to get to the point that that's going to be a priority for me. At approaching 40 years of age, I am trying to eliminate work. I'm really, really close to toes in the water, ass in the sand, not a worry in the world, got a drink in my hand. I am really, really close to that. So I don't ever see myself in front of charts. I don't. I know people crush. I know people make a ton of money. I don't think that's ever going to be right for me in my life. What I do look at is historical implied volatility, because it directly affects the value of the premiums for the options that I am trading, right? When implied volatility is low, we're going to buy options because the value of that option is going to be low. When implied volatility is high, the value of that option because of extrinsic value is going to be higher. So that might be a great opportunity to sell a call, maybe even right before an IV crush, right? Implied volatility is high. We sell a call. We get a ton of premium. IV crush happens. The value of the option tumbles. We buy to close at a profit that way. Risky business trying to do that, but I've seen people do it. I'm not opposed to technical analysis. I'm not opposed to day trading. I think it's a shame that sometimes people associate day trading with just penny stocks. I know people that day trade with Apple and much bigger stocks. So it has a bad cliche, and that penny stock tarnishes options trading strategies all over the world, because every option strategy to somebody outside, some people that trade options, every option strategy is YOLOing penny stocks. So I'm not knocking day trading, momentum trading, swing trading, scout. I'm not knocking them. I will say this, if you're going to do them, you should probably have a very, very, very strong grasp on technical analysis. I believe in it. I believe in market indicators, especially on the short term, mostly because I know that people are doing that. But personally, Brad Finn is more just looking at the value of a stock to establish if I want to write a put. The cost per share, so I know the strike price if I want to write a call. And the historical implied volatility. So I can kind of use that plus the intrinsic value, which is obvious, to determine if this is the right time to buy or sell a call. All right, bud? I hope that answered your question. I hope that dude just trolled me just to see what I would say. Brian Hunn's in here? What people are saying Brian Hunn's name? He's in here? I saw somebody said that they left a question on average money. I want to make sure that I answer that. Hold on. Where was that? Somebody said I left a voicemail on average money. Shoot. Where was that? Am I scrolling up? Am I going to miss it? Oh, no, wait. Hold on. What did I miss? I'm a teacher. He said, I was laid off from my corporate job last year and now I have an e-commerce. Yes. Make money on the internet. That's one thing I definitely learned this past week in FinCon. There's so many freaking ways to make money on the internet. F is Brian. I can't believe. Confidently too. Swing. Oh my gosh. Yeah, start channeling your brilliant ideas. CB got that reference? Good. He doesn't single-handedly support the podcast. He does. Oh, you're waiting for the super chat. I cannot get super chats on this. And I hope that goes to show that I'm doing this out of love, because this channel will not become monetized for a very long time. I'll probably hit 1,000 subscribers in a month or so, 2. But the 4,000 hours of watch time will not be reached until springtime. So I am forfeiting my super chats. I will not get them. If you want to support, join the Discord for a month. That's a $15 super chat. Or I guess you could Venmo me, the Fin Mindset. Send me some beer money over on Venmo. I guess you could do that. But I have forfeited my opportunities for super chats. When I can get a super chat, I promise I'll put a banner or something. And there'll be a cool, if you subscribe right now, it goes bling bling. I'll put a cool super chat chime when we can finally get it. The Brian Hunn Foundation. He is a very, very generous man. And you will see, I think Wednesday we have a guest that's going to be on the podcast. So I don't think we're even going to be live this week. 2 weeks in a row we're missing on average money. But wonder what Brian Finn would think. There's so many Brian Finns too. There's a bunch of Brian Finns. Once my debt is gone, I'll be willing to join the Brian Hunt Foundation too. Thank you. I appreciate that. I really do. C Night. It's not a tilde Hun, but I do think of it when I see it. You got to be in the Average Money podcast. You got to be in the Average Money podcast weekly live stream, which you can get through Patreon if you want to see who Brian Hunt is. He is not only a good drinker, but a pretty good options trader too. And he spreads that options trading love with JJ and I. I told that dude to send you his 10K. He's given us a ton of money, so I don't think I'll ever ask of anything from that gentleman. Maybe I just can't wait to see him so I can buy him a beer, much like many of you. And in FinCon, I got to meet a couple people that were from the Austin, Texas area. I think somebody even drove, I'm not going to call them out so they don't sound like a weirdo, but I think somebody actually drove like 2 hours to come have a drink. And that is like the most incredible thing in the whole world to me. You know, putting faces to names, and especially after 4 years. Like I said, I've known Day Tripper for 4 years, 2 years, whatever it is, you know, but couldn't pick him out of a lineup. And it was also super humbling for the other side of that. People that, you know, had never seen me or met me. And I remember it was one thing. So I got there and we went out to the bar and I got to meet a ton of people. And it was super humbling. People super kind, buying me drinks. JJ and I both got ourselves into a little bit of trouble. We'll talk about that next time we're live. But the same gentleman came up to me the next day, and he's like, "Oh, we met last night." I'm like, "Yeah, I know who you are." I'm like, "Thank you. We met last night. Thank you for the drink again." And he goes, "I will tell you, there's it's a different feeling today." I'm like, "What? Because we're sober?" And he goes, "No." He goes, "Yesterday you just had like a plain white tee on," and it was like, "Oh, there's Brad." And he's a lot taller than I thought. But today, that day, I had a Dubco shirt on and my glasses. He's like, "But today, it's like your glasses, your Dubco shirt. It's like really you." So that was like really cool. And like I said, super humbling. I went in there with another guy being like, "I've never seen you without glasses on." I full disclosure, guys, I have severe social anxiety. Not that, what's the word I'm looking for? I'm super self-conscious of my looks without my glasses on, which is why I never do videos without them. But when I got there, I had sunglasses on. I walked into the bar like this, and people were like, "I think that's Brad. I think that's Brad." So there you go. Some little social, now you know one of my weaknesses. You know, if you really want to get under my skin, you look ridiculous without your glasses on. But yeah, somebody drove 2 hours. We drank bourbon. It was fantastic. So I guess point being, if you're local, or if I say I'm going to go somewhere, I'll buy you a beer. I bought that dude a beer. Narrowed it down to a guy. I bought that dude a beer, a couple of them, and dinner. Sick. Charles, you can charge it to Brian. Charles, it will definitely be probably through average money. We already have something that we always say this, like we were going to do Austin, and we were going to do Asheville, and we screwed that up, and we have not forgotten that. So we have something in the works. The summer's brutal for me because I like to sit on the beach. The fall is brutal for me because I go back to work. FinCon, I just took some time off of work. Thanksgiving, holidays are really big. I lost my dad early in November, a couple years back, so that's like kind of do things with the family, and then Christmas, and then winter. So we have an average money thing planned up, but there'll be a retreat, and then I have the Patreon ETF that not everybody knows about, the Patreon ETF, but I've been taking a large majority of my Patreon money and buying VYM with it. And I said one day when it gets to 100K, I'm going to take like the people that have been around the longest or something on a trip, or throw them a party. So that's still going to happen too, but I wish I could get everybody in a Zoom call, but there would just be too many people going back and forth. It'd be too loud. Well, thank you, Robin. I do appreciate that. My wife says the same. There's some times where I'm like trying to record a video, and I can't find my glasses, and I don't record it. My wife's like, "You are a psychopath. Like, you're a psychopath." I can't even really see with them on. They're so old. For me, my glasses thing is like, I don't really sleep that much. I have really big bags under my eyes generally. Say I'm actually not that bad. But like usually like it looks like I like got punched in the face, like I have black eyes. So like after like a long time of like people just being like, "Are you okay? Did you get punched in the face?" So I just cover it up. I'm self-conscious about the bags under my eyes, not how I look. I'm 40 years old, got 2 kids, and a smoking hot wife. I don't care how I look. It's just I didn't want to look like a doofus or like look like I was getting punched, like I had black eyes. That's really what it was. Wow. 2-hour live stream. Like I said, if I get voicemails, I'm going to answer them. Yeah, Eddie. I'll make one of those. When I can get super chats, I'll make one of those. Maybe to be like, or something like that. Or, I don't know. We'll come up with some cool sound clip. Maybe you guys can send me one for when we could do super chats back in like March. Permanent bags. Yep. Bags on the eyes. Also, too, my Irish fair skin. So, like, I remember the doctor was like, you just have fair skin. Your veins are closed. I'm like, no, dude, I'm dehydrated because I drink a lot, and I haven't slept in 6 months. Then my kids were born. Yikes. What should I release tomorrow? Who the F is Brian? Bunch of clips. They're going to come out. I do have to get real videos out. I'm sorry I haven't, like, sat down and made a video, guys. Back to school is freaking crazy for me. FinCon. It's been discouraging with views down. It gets really, really hard to make a video or get motivated to make a video when you know that YouTube is just not pushing personal finance content right now. So that's like me kind of just whining a little bit. Like, I'm not saying I'm not motivated. I'm doing this. This is awesome for me. Like when Dave Ramsey retires, I want that job. I want to take calls for a living and just answer them, even if they're the same effing question over and over again, because it's probably the first time that person's heard it, right? Gotta drink water between beers. No. Ooh, firefighter helmet. Today was the Tunnel to Towers run, which is a big run here with all the firemen in New York City. It's a really, really good race. Leave me some voicemails, guys, and I'll get live again. If you are waiting for average money, guys, one more week. Sorry, we're doing an interview this week. JJ and I contemplated doing the average money on Thursday. So if you are a member of the Patreon, that's going to be live for them. It's $1 to get in there. $5 if you want to be like the live stream badass. But this is free. If you want to support the channel, join my Patreon. Join the Discord chat. It's super valuable. They're super smart. Smarter than me. They add more value than me. But talk about out of the money leaps put. I did a couple weeks ago. That's a clip on the main channel. We're on the way out. If you'd like to leave a voicemail, I'll definitely talk about it again, guys. Till I catch you guys on the next one. Stay positive. Work really, really hard. And always, please, I beg you, be kind to other people. Hope you have yourself an amazing day and even better.